If you're thinking about buying a home as a first-time home buyer, you don't know where to start. If you're thinking about buying a home, but you don't know where to start, you don't know what your debt to income should be, you don't even know what your debt to income is, you don't know how to calculate it, and you keep hearing that all these realtors are trying to get you in touch with their lender for us to actually be able to see how we can help you, this video is going to be a game changer for you. And if you don't know me, my name is Alexa. I'm a real estate team leader here in El Paso. I'm also an investor. So I have Airbnbs, I have a rental portfolio, and I started just like many of my clients as a first-time home buyer. So my goal with these videos is to just help you have all the tools that I wish I would have had when I first got started in the industry. Now I'm going to be referencing my iPad here so that you can actually see some visual examples of everything we're going to talk about so that it's easy for you to digest. So let's get to it. Now the first thing here is that let's assume we're doing a FHA loan, and let's just say your purchase price is going to be $300,000. This is where it's important for you to understand that it does matter where your FICO score is. Let's just assume you have a 580 and above, and let's just assume that we're getting you a 5.87% on the rate, okay? Now, this is super crucial because a lot of the times you start looking at what your purchase power can be, but nobody is explaining to you what the debt to income is, which I'm going to explain to you in a second. Now, let's just say at $300,000, because you're a first-time buyer, your down payment is going to be 3.5%, okay, of your purchase price. This is where the $10,500 comes from. Now, typically, your closing costs are going to be 3%. So let's just assume we are at $9,000. Now, if we actually add both of these up, and this is a part where a lot of people get confused and they're like, why is it that this person gave me this number and another person is giving me another number? Well, to be very frank with you, this is where the strategy matters, and this is where working with the right team is going to play a huge difference. Now, if you worked with us, our clients save the closing cost and you don't have to worry about that. So if we do this example where we subtract this, we're back to $10,500. That is what your out of pocket would be, which you'll hear the term cash to close, okay? This is your cash to close. Now, this is where you want to pay attention because, again, if you don't understand it, it will be very frustrating and you'll end up putting yourself in a situation where you are making your entire experience purchasing a home very overwhelming. Now, a lot of lenders are gonna say your DTI, and you're like, well, what is a DTI? Let's just say you're making $60,000 a year. Some of you are making more, some of you are making less, but let's just use $60,000. What the lender does is they divide it by 12, which gives them your total monthly income, okay? Now, here is the part that you want to pay attention to. Let's just say you have a car payment for $600. And let's say you have a credit card payment for another $100. Now, some of you, it's going to be higher than others, and this is where you want to make sure that you have a strategy, because sometimes if you plan accordingly, you can actually end up working in your favor, and maybe we start tackling down the credit card, or maybe we refinance the car, which can actually give you more purchase power. Now, the other important part here is your DTI limit. Typically, we're going to see a 45%. And you're like, Alexa, well, what is the 45%? This is how much the lender is actually going to lend you when it comes to the income that you're bringing in. Now, some banks will actually allow you to go upwards of 50%. Some of them are actually going to be even lower, and they might just do a 43%. So you'll see how this plays out in just a second, because This is the part where I see a ton of clients that they're like, no, it's okay. I know how much I make. I know that I don't have a lot of debts. And then they start going and looking for houses with an agent that is too afraid to tell them that they're doing everything wrong. And then when it comes down to it and they're ready to close, I've seen deals like this blow up where I'm representing the seller, and because the agent didn't go and do their due diligence with their client, the lender didn't do their due diligence like they should have done, we end up finding out that the deal is going to fall through because maybe the ratios were a little bit higher than what they were willing to actually accept. Okay, so I hope this is making sense. Now let's just assume, now that we have these numbers clear, the next part is we need to actually start accounting for how is the actual bank going to use these numbers that are going to play out in this entire equation. Well, we need to get the 5,000, okay, and we need to multiply it times the 45%. This is going to give us a total of 2,250. Now, this right here is your max total debt allowed. And some of you are thinking that this is how much purchase power you actually have because somebody didn't take the time to explain this to you properly. That is not true. What you want to think about is that this is actually going to be the total monthly obligations that you cannot exceed. So let's just say we subtract the 2,250 minus the 700 in debt that you have, remember the car and the credit card. That means that your maximum purchase that you can actually do on a monthly basis is going to be 1,550 toward an actual mortgage, okay? Now, this is where there's options for you, and I don't want to overcomplicate it for you. This is why I like to have strategy calls. So if you're watching this video and you're interested in having a strategy call so that we can go over all your numbers specifically, send us a DM or go ahead and click on our link down below so that you can reach out to me and my team. But let's just continue to use this example. That means that if you, and we're going to go back to this $300,000 house that we're buying, your monthly payment, if we are looking at the big picture here, at the $300,000 with the example that we just used right now, your monthly payment would actually be closer to 2,780, okay? Versus what, again, if we look at the DTI, what you're actually qualifying for. So this is why a lot of people sometimes get frustrated, because realistically, if you are in this bracket here of what your monthly income is actually coming out to, your purchase power should be somewhere between 180 to 230 on the purchase price of your home. And again, as I mentioned before, this is where a lot of people get discouraged because they don't qualify for the amount that they want. But now we're going to go to this example. This is where I've been able to get some of my clients at a 4.5% rate, depending on the builder, depending on the incentives, and depending on the home. These are some of the strategies that we use to ensure that we can help you ultimately get the overall house that you actually want. Because if at the end of the day it doesn't make sense, maybe we need to just wait a little bit. Maybe we need to work on tackling on some of these debts, and once we remove these debts, right, that would actually put us closer to the 2,250 that you would have as purchase power. And now if you look at these numbers, we're really close to what you would need to make in order for you to purchase the $300,000 home. Now this is where some of these rate buy downs, remember this word, come into play, because it helps you buy down the interest rate. Now, this is really where strategy comes into play. I've been able to have some of my clients where we help them buy down the rate. They don't have to worry about bringing more to the closing cost because we negotiate all of that for them. So it does matter who you work with. I've seen it time and time again where some people are working with another agent, then they start talking about some of the examples that I share with them and they're like, no, we can't do that. And I'm like, I don't know why they're not able to do that unless they're trying to pocket more money and they have something that they shouldn't be doing with the lender, or I'm sorry, with the builder, or in this case, the seller, because maybe they're representing the seller. But this is why you having your own representation truly matters. And as you can see with the numbers, understanding your debt to income matters, understanding your purchase price matters, interest rate matters, and overall your cash to close matters. So if you are in the market and you're considering purchasing a home, I hope this video was helpful. Whether you're looking to buy in El Paso or anywhere else in the United States, I have a team member that can assist you. We carefully vet these agents that we recommend you with to ensure that they are in alignment with the overall requirements that we have when it comes to our team, the overall incentives that we're trying to push out for our clients, and just making sure that they have good customer service, making sure that they are there to protect you, to serve you. And at the end of the day, my goal is that you decide to work with us. But regardless, if you are not going to work with us, I hope these examples help you in making a decision for you and your family to make a wise investment. So with that, thank you so much for hanging out with me, and I will see you on the next one.